Hello and welcome to the Gold and Silver Club Weekly Commodities Review presented by Phil Carr and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities market. So we'll be analysing the week's performance. The live session will cover an end-of-week summary for the metals, the energies, agriculture. We'll look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll also have a look at the week ahead, so key events looking forward, and we'll be answering any questions you may have during the session as well. So we'll just take a look at the fundamentals. Gold has posted its longest rally in 2 months on the safe haven demand. This week gold posted its longest rally since August as weaker global economies and slumping U.S. equities revived demand for the precious metals as a safe haven asset. On Wednesday, gold price hit a monthly high of $1,249 an ounce to rebound from last week's low of $1,182 an ounce. That's an impressive gain of 5.4% or 670 points profit in less than 1 week. Gold prices received a boost amid lingering concerns about global economy growth, particularly in the EU, combined with a weaker US dollar. On Thursday, St. Louis Federal Reserve President James Bullard suggested that the central bank should consider delaying ending its quantitative easing program as inflation expectations have fallen. The Fed is expected to close its asset purchasing program this month and hike interest rates in 2015. In the energy markets, crude oil prices finally rebounded from 4-year lows. On Friday morning, WTI prices added 0.29% to trade nearly at $82 a barrel mark, whilst Brent gained 0.11% to trade near $86 a barrel. So elsewhere, soft commodities have continued to outperform this week. On Thursday, wheat surged 2.5% to trade at $521 a bushel. Its highest price actually since September 2011, and corn soared to $3.57 a bushel to hit a 1-month high, pushing up October's gains to 11% for the month, whilst coffee rose 1.7% to hit $221 and 90 cents a pound this week, so the contract's highest level since January 2012. Before we get started and have a look at the technicals, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications, speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications who've appeared frequently on financial television. So we'll take a look at the gold price at the moment. Currently, gold is trading at $1,238 per ounce. So we'll take a look at the technicals shortly. Before we do so, we shall have a look at the top trades of the week using the Gold and Silver Club's signature trading strategies. Firstly, we've had some lovely sell short opportunities this week on the energies, particularly Brent and WTI crude oil. So we had a lovely sell short here on the 14th this week. So for a selling for a profit of 265 points. The risk on the trade, 130 points, so $1,300 risk for a profit of $2,650 as oil broke down to 2-year lows. Also WTI crude oil, very similar situation, taken out a major support zone. The risk on the trade, 160 points, $1,600 for each lot traded for a profit of $3,800 for a 2-to-1 and 380 points profit, and a lovely sell short on Palladium too. So the risk on the trade, 170 points, $1,700, risk for a profit of 340 points, $3,400 for a 2-to-1. So some lovely day trade opportunities this week. So we'll just move over now to the live markets. We'll have a look at how the technicals are shaping up. So first of all, first market we'll actually take a look at will be the copper market. What I want you to note here on copper is we are following a very clear trend pattern here. We've got a downward trending channel. We've come down, we've retested the lower end of this trend channel. We've formed at the moment a rejection candle, and as we go into next week, essentially what we'll be looking for is just a retracement and come all the way back up to the higher end of this channel. Okay, so that is going to be sitting right around the 30.932 level. So this is the area of resistance that we would expect the market, if it continues to break out to the upside next week, to come and retrace to, and then expecting further downside again. So at the moment on the copper market, we are looking for short-term buy opportunities, especially as we go into next week. We've come down to the lower end of the trend channel, and then ultimately we are going to be positioning ourselves again for a sell short at the resistance zone once we get back up there. So that's what we're looking for on the copper market at the moment. As we move over to the energies, energies are really starting to get ready for an explosive move this afternoon. These are definitely going to be ones to watch. So we've got a very clear downward trending channel here on light sweet crude oil. You can see here right now we had a really nice sell-off this week, broke down to 2-year lows, and we've had a retracement, but this has been muted by the resistance channel we've got here. Perfect bounce off this channel. You can see traders now entering into this for a sell short. All we need to do now, break 82.52, and we are going to be looking for a lovely sell short opportunity all the way down, potentially about 275 point move here. So we are quite excited about this afternoon. We should certainly see some additional volatility on oil, and we would expect a breakdown. We do need to come down and break this support, and we'll be expecting further price movement to the downside on light sweet crude oil. The next trade we've got here is also on Brent. So Brent, very similar situation. Brent's broke down significantly this week, and look how clear this trend channel is. We've just had a retracement. Obviously some traders have taken profit around this zone. We've also had some day trade opportunities to trade it back up to resistance, but now we're getting a rejection candle. Again, we just need to come down, break through 85.24 here, and we could really see some additional downside. So in the first instance, we'll be looking for circa about a 200-point move back down to the weekly lows. So those are definitely two markets you want to keep an eye on this afternoon. Both WTI, Brent crude oil, you can see they're coming down nicely now. The momentum should pick up once they break through these support zones. So those are definitely the top trades this afternoon. Natural gas, also keep an eye on natural gas. It's starting to break down now on the weekly very clearly. So we are on the higher time frames. We're looking for a break of 3.714 as we come into next week, and we'll really be looking for a lot of further downside. That's a major support level here, going all the way back to June. So you see this very clear neckline and support zone. If we get a break of that, we'll get a similar move to what we've seen on WTI and Brent crude oil, a lot more downside. So do keep an eye on the energies this afternoon, and especially natural gas into early next week. Now, gold is a little bit muted today. We've had some lovely moves this week. You can see this wedge and this V-shaped reversal pattern that we're starting to form now. We're just looking for a break above resistance here. So we're looking for a clear break above the 1250 zone for the next big move higher. Any retracements back to around the 1230 we'll also be treating as buy opportunities at the moment on gold. Gold just continuing to consolidate, but we're slowly grinding higher here and forming a base at the moment. Similar situation to silver. Silver really needs to get above $18 an ounce to build up some momentum here, but continuing to consolidate, and we're looking for just more evidence to the upside here that we are going to get a breakout. Of course, if we come down and we break through 1666, which is the 4-year lows here, we'll be looking for further downside. A break above $18 an ounce, we're looking for further upside. Also have a look at the platinum and palladium market. It's had some lovely sell shorts on palladium this week. We've now come down to a key support zone, which is at circa about the 700, and we're currently at $750 an ounce. You can see this whole zone providing support again. We'll wait for the next setup. So the setup for us has already delivered a nice sell short. Now as we go into next week, we'll continue to monitor the price structure here. On the higher time frames, you can see got a major trend line which has been supported on palladium. So we'll take a look at that more closely next week as well. Platinum also following a very strong downward trending channel. So platinum coming back to retest the upper end of that channel, and we'll be waiting for the next setup here, so either a breakdown of the weekly lows here, which would give us more selling pressure below $1,236 an ounce, or a break above 1291 would give us more upside up to around the 1340 to 1350 zone here. So that's what we're looking at for platinum right now. Also, we've had some lovely trade opportunities this week on both corn and wheat as they've continued to break out to the upside, forming a nice base here, nice trend channel. So we're waiting the next setups as we go into next week. We've had some really good breakout trades this week on corn. Also on the wheat market, wheat finally broken out, nice resistance at the 510 level, which you've broken out from. Now if you look at this swing low going back to July and September last year, we've now started to clear above that. We've got a little bit of support going previously back to June, July and August, where the market bounced off this level several times before breaking down. That will be the next resistance here for the wheat market at 525, but having a nice nice rally at the moment on both wheat and corn. And also keep an eye on the coffee market. Coffee has had a pullback today, but very quickly we found support, forming a nice rejection candle off a trend line and a previous resistance turn support zone at the 208 level. So coffee is definitely one to watch as we go into next week. A break above 225 on coffee would see us breaking out to 2-year highs. So coffee is definitely one to keep an eye on as we go into next week. And the major markets to watch this afternoon, certainly WTI and crude oil. Watch these very closely for a potential continuation to the downside. Okay, so we'll just take a look at the major news announcements now as we go into next week. So the week ahead news that we've got, we'll cover the 6 major announcements you need to watch out for. So Tuesday, the 21st of October at 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the U.S. existing home sales. So existing home sales measure the change in the number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the U.S. housing market. It's a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then Wednesday, the 22nd of October at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the core CPI. So the core consumer price index, CPI, measures the change in the price of goods and services, excluding food and energy. So the CPI measures price change from the perspective of the consumer. It's a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And then Wednesday, the 22nd of October, at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms, of course, report those levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. Then as we come into the latter part of next week, on Thursday the 23rd of October at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Thursday the 23rd of October at 3:45 p.m. Central Africa time, 9:45 a.m. Eastern time, we have the US manufacturing PMI. The Manufacturing Purchases Managing Index measures the activity level of purchasing managers in the manufacturing sector. A reading above 50 indicates expansion in the sector, whilst a reading below 50 indicates contraction. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And then finally, we have on Thursday, the 23rd of October at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. So the Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So of course a higher than expected reading should be taken as bearish on natural gas prices, while a lower than expected reading should be taken as bullish. So those are the 6 announcements we need to look at as we go into next week. So of course, if you are interested and would like to really take your trading to the next level, you can learn to trade commodities with the Gold and Silver Club. Very simply, courses are available at our training centers and online. You can request information on the Gold and Silver Club coaching programs and live trading room by going to www.jointhegoldandsilverclub.com. You can also contact us at our Johannesburg office at +27 11 083 8403. I'll leave those details on the screen for you very shortly. Also, make sure you subscribe to our newsletter at www.thegoldandsilverclub.com. You'll receive free weekly reports on the precious metals, energies and agriculture, as well as live market analysis and prices. Okay, so I shall leave these details on the screen for you here to get in touch. So with that, we wish you luck for the rest of today's trading. A lot of setups to take a look at, and we'll certainly see you on the next one. And if you do get in touch and would like to join up, we shall see you on the inside. Okay, thanks everyone. Cheers. Bye-bye.